minutes. So we will start. But before we start, let me tell you that we have a white paper in our website, very similar to the presentation, or probably with similar contents, which you can download for free. It is under the blog, and then you will see the white papers, and then you have several ones, and one of them is on fiscal obligations of U.S. citizens. There is another one on expats, which is a more general for other expats from the UK and other countries. But I mean, you can download the US, well, both of them. I mean, you can download any of the white papers. And also, I want to let you know that you don't have to worry. We will send you the PowerPoint presentation that we are having now with all the data. We will send it to you by email. I mean, I don't know, tomorrow, over the weekend, something like that. So don't worry about that, about the PowerPoint. We have to wait. Well, we are not going to wait. We are going to. I'm going to start telling you more or less what is the general thing of this presentation, in which we will talk about the fiscal obligations of U.S. citizens, and then as you know, you have in the USA you have two fiscal obligations, which is the 420, the 1040, I'm sorry, form, and also FinCEN 1114. The FinCEN is the FBAR, the Foreign Bank Account Report. I forgot to tell you before we start also that you can ask questions and through the P&R preguntas y respuestas that you have available, and then you can start to type the questions if you have a question during the presentation, which we will answer them all at the end. So please do not hesitate to write anything that you need, okay? Okay, then the U.S. obligations are these two, the 1040 and the FinCEN, and also in Spain is basically the same thing or similar thing, which is the Modelo 100, which is the IRPF, which corresponds to the 1040, and the 720, which is the corresponds more or less to the FinCEN, which is the list of assets that you have abroad. Then I also add the 714, or we also add the 714. We will talk a little bit about it, because this is we know that this is a real concern from lots of expats, which is the wealth tax, the patrimonio. Okay, so that's, I consider these three as the three fiscal obligations that you have in Spain. Okay, well, the first thing that we are going to be dealing is the residency. As you know, in the States, people are kind of classified between U.S. persons and non-resident aliens. The U.S. persons are U.S. citizens, green card holders, and resident aliens, people that were even aliens, but they live there. And but in Spain, we are classified, or we classify the people in two groups: residents and non-residents. And then, according to the treaty and also the Spanish law, if you are a fiscal resident, you have to declare in Spain. And if you are non-resident, well, we will see it later. You will have to only declare where you earn from Spain. Anyway, the tax residency is calculated on the number of days that you spend that natural year in Spain. So if you are here more than 183 days, that year you are fiscal resident of Spain. And it doesn't matter if the 183 years at the beginning, at the end, in the middle, or whatever. It is 183 days. The other 2 points, those who have the main center of economical business interest in Spain, and 3, I would leave them just for people that they are not 130 and 183 days in any country, because they live in 3 or 4 countries and then they stay more. Then, in order to establish what is the residency, the fiscal residency, they look at where you have the business, and then even if you have business in 2 different countries, then they consider what is your family living. Then that is the tax resident for the fiscal residency for you. Okay, then the tax residency, the tax residents, they have to declare in Spain worldwide income, regardless where the income has been generated or the residency of the taxpayer. If you are resident of Spain, then you have to declare all your income, the same as in the 1040 that we will see later. Okay, and then the fiscal obligations in Spain, as I said before, is the personal income tax return, the IRPF, the 720 and 721, which are is an informative return on assets and rights held abroad. That we will also talk about that later. This is not, you don't pay any taxes here, and also just a reminder, it is the time to file these forms, as you will see later, are right now between January and March of every year. And then the last one is the wealth tax, which, as you know, is an autonomic tax. It depends on the autonomy that you live, and every autonomy has different rules. Okay, so we will see that later too. The non-residents in Spain, the non-fiscal residents in Spain, they are taxed only on the source income that they receive from Spain. Okay, and then they have to file the 210. I don't know if Olga is available.
Yes, I'm here.
Okay, then Olga will tell us everything about the Modelo 100.
Okay, thank you, Tanya.
You're welcome.
Welcome, and thank you for joining us today. My name is Olga Generalova, and I'm National Director of US Tax Consultants. I spent last 4 years at US Tax Consultants, helping US citizens in Spain understand and comply with their Spanish tax obligations. So I recognize many of your names, and it's really nice to finally be the face behind the emails or phone calls. So let's start. The first question is whether I'm required to file the Spanish tax return or not. In this slide, you can see the income thresholds that determine when a Spanish tax resident is not required to. It's essential to understand this. If you are a tax resident in Spain, you must declare and pay taxes on all of your worldwide income. Not just what you earn here, but everything from every source, wherever it comes from. One more thing to keep firmly in mind. If you receive several types of income and just one of them goes over its filing threshold, then you must file your Spanish tax return. And once you file, you must include every single category of income for the year. And here is something that always surprises people. Any income without Spanish withholding, any foreign income, usually obligates you to file, even if the amount looks small. Next slide. Tonya? In the next slide, you can see the filing dates for the 2025 tax return and the corresponding payment deadlines. So the filing time is from the beginning of April. This year it's 8th of April till June 30th. There is several quick but very important things. First, tax data only shows income from Spanish payers. So the draft, which provides by Spanish tax agency, will show you just the Spanish income. Anything foreign needs to be added manually. Second, if you want to use direct debit payment, remember that return must be submitted before June 25th. And the money charge on the very last filing day, which is June 30th. And lastly, if you've just become a Spanish tax resident in Spain, it really helps to have a Spanish bank account with a bank that collaborates with a tax agency, which is typical Santander, BBVA, Caixa. Be careful, because some foreign banks have an ES-IBAN, but they are not collaborators. For example, Revolut. So you cannot use them for direct debit. And also, when you will open your bank account, ask your bank to report the account to the tax agency as soon as possible, so you avoid last-minute headaches. And the last question that people are asking, you can pay by card or from a foreign SWIFT account, but most tax preparers, including us, can't use this option, because it requires your digital signature or clave. So in this case, sometimes we help our clients by video calls to make a payment if there is no any Spanish bank account. Next slide. So here you can see that there is two types of filing, which is jointly and individual filing. Just a few quick notes. First, joint filing is often not financially beneficial, unless one spouse has very little income. And other thing, for example, for unmarried couples, Spain has very strict rules. Only one parent plus children can form a family unit. The other parent must file individually, even if everyone lives together. And the good news for you and for us, the software provides us with both options, so we can check both of them, compare, and choose whichever works best. In this slide, you can see how the Spanish tax agency classifies income and places in either in the general base or in the saving base. In Spain, there is one point. In Spain, gain and losses can only be offset within the same taxable category. They cannot be mixed across different bases. Another key point, losses usually cannot be offset across different taxable bases, but they can be carried forward and used within the next 4 fiscal years. In the next 2 slides, you can see how IRPF works as a progressive tax. As you know, it means your income is divided in 2 different brackets and each tax at its own rate. So every autonomous region set its own brackets and tax rates. And since many of you are from different parts of Spain, we have prepared an average so you can get an estimation of how much tax you might pay without the complication of regional difference. So here you can see each bracket, the amount of tax that corresponds to the top of each bracket, and the average effective rate once the full bracket is applied. So to give you a quick idea of how this works in real numbers, for example, if your general base income is 60k euros, you would pay approximately 18,450 in tax, which means an effective rate of about 30% of those 60k euros. And keep in mind that the exact rates vary depending on your region. And from a tax point of view, Valencia is one of the more expensive regions in Spain. Next one. Okay. So here you can see the main types of income that Spain classifies as earned income. And there is something very important we see again and again with clients. The first thing, distributions like US Social Security benefits, 1099 SSM, are taxed in Spain as earned income. They are not considered a public pension here. The second, the taxation of income from public employment in the United States will depend on your status in Spain. So if you are a Spanish citizen with a DNI, that income is not exempt. It is taxed in Spain. But if you are a Spanish tax resident with NIE, then that income is exempt with a progression. It means that it counts to calculate your tax rate, but the rate is applied only to the rest of your taxable income. Also, there is quite common question about how IRA or Roth IRA distributions will be taxed in Spain. So IRA distributions and similar retirement products are taxed in Spain as an earned income as well. And Roth IRA distributions suppose only pay taxes on the capital gain portion. But calculating that part is almost impossible without very detailed information. And in the case of an audit, the taxpayer must prove it. So if not, Spain will tax the full amount as an earned income, and also you will pay a fine. And other thing, next one, that remote work from Spain for a foreign employer does not qualify for foreign work exemption. And one thing, for if you work for an employer and receive W-2, you have to know that Social Security and Medicare taxes, they count as an expenses in Spain, and they could be deducted in Spanish tax return. Also, we find quite often also working remotely as a self-employed from Spain for a non-Spanish contractor even require you to register as a self-employed in Spain, which means that you will pay Social Security fees and you should file quarterly taxes in Spain. And last thing that I would like to mention on this blog, that income earned through an LLCs that is not treated as a C Corp is attributed directly to its ownership in Spain. And the next slide, which is real estate income, this one. So when we talk about real estate, If we talk about rental income, the general idea is similar to US. You are taxed on the difference between income and expenses. Unlike the US, annual expenses like community fees or the EB, local property tax, can only be deducted for the portion of the year that property was actually rented. Mortgage interest is deductible too, but with a limit. It cannot exceed the rental income earned during the tax year. Depression is mandatory in Spain, and even if you don't claim it, apply it in your tax return, that in the future the tax agency will assume you did. So it means then if you decide to sell the property, the gain will be calculated with the applying of depreciation. And finally, something very different from the United States. Every property that is not your primary residency must be declared in your Spanish tax return and is taxed. The value uses, the value which you will use is the acquisition value, not the market value. And it means the same. So if you live in Spain and you have an empty apartment in the United States, Spain imputes a taxable amount equal to 2% of 50% of its acquisition value. Next one. So here we pass to wealth tax, which is other fiscal obligation in Spain for fiscal residents here. The filing period for the wealth tax is the same as for Spanish tax return, from the beginning of April till the end of June 30th. So the same, the wealth tax applies to resident individuals' worldwide net wealth. In the case for non-residents, they will pay wealth tax only on to assets located in Spain. Important part is that the return must be filed only if you exceed the general exemption of 700K. And in the case of Catalonia, Valencia, Extremadura, the general exemption will be 500K. And only tax residents can apply an additional 300K exemption on the value of the primary residency per person, because it's an individual obligation. Other thing, probably you don't have to pay wealth tax, but you have to file wealth tax return, even if you end up with zero tax due, simply because your gross assets exceed 2 million euros before deducting debts. And finally, solidarity tax. So this tax was introduced as a temporal measure, but we all know how temporal taxes tends to behave in Spain. It lives with us last 4 years. So the due date for solidarity tax is in July, from the 1st to the 31st of July. The solidarity tax is essentially an extra layer on top of the wealth tax and designed for individuals with assets over 3 million euros. In practice, it follows almost the same rules, the same structure, and nearly the same tax rate, just with a higher threshold. So this is the Spanish tax return and the wealth tax. And I pass the word to my colleague Jose Miguel, who will tell you about Modelo 720 and 721. Jose Miguel.
Hello, thank you, Olga.
Yeah.
All right, Modelo 720 and 721. Can we pass to the next slide, please? All right, we must know that these are informative forms, so we do not pay taxes for them. This is good news, right? The thing is that we must do it properly. And there are many factors that can affect these kind of forms, all right? We are talking about that we have codes, subcodes, sub-subcodes to treat all the assets in these forms. So it is really highly recommended to be sure that we know how to treat these assets in the form. So we will avoid any kind of penalties and fines. And obviously, if these forms, we don't pay taxes for them, it makes sense that we will not pay fines and penalties for them, right? Why do we have to pay money to the Spanish tax agency? We don't have to. So I insist that we must be sure that we know how to treat all the assets we have outside of Spain in these forms. All right. The Modelo 720 has 3 blocks. And these blocks are independent from each other, all right? The first block has to do with any kind of bank accounts we have abroad. Checking bank accounts, savings, CDs. What we have to do here is we have 2 values here to declare in the 720 for the bank accounts. The first value is going to be the balance of these bank accounts by the end of the year, of the fiscal year. And the second value has to do with the average balance of the last quarter of the year. So basically, we will have to get these balances, sum all the balance of all the accounts, and if the total sum is more than 50,000 euros, if this is the first time we declare the 720, we will have to declare all the accounts. The second block has to do with all kind of brokerage accounts, investment accounts, retirement plans accounts like IRAs, 401ks, annuities, and life insurances. In this case, we will have to look for the balance of each account by the end of the year, by the December 31st. Then again, we will have to sum the balance of each account, and if the total sum is 50,000 euros or more, we will have to declare all these accounts in the 720. And the third block is related to the real estate, to the properties we may have outside of Spain. Here, we're gonna use the value. Let's say, better said, we are gonna use the purchasing price of this property. And if we have 1, 2, 3 properties, we will sum this value, this purchasing value, and if the sum of all these properties, of this balance, these values, is more than 50,000 euros, we will have to declare every property, all the properties in a 720. All right. Next slide, please.
No.
Thank you. All right, and we have the Modelo 721. Obviously, this could be the fourth block of the 720, but the Spanish tax agency decided to make a new form, and it is called the 720. And here, again, we are gonna report our cryptocurrencies that we may have outside of Spain. It is important to know that we will only declare the cryptos that they are custodian by a third party. And this third party must be an entity that is a foreign entity, right? For example, if we have cryptos in a wallet, maybe a cold wallet, a hot wallet, that means that we custodian our cryptos ourselves. So we do not have to declare this in the 721. Only we declare the cryptos that we have custodian by a foreign entity, right? And then again, here we have to sum the value of all our cryptos outside of Spain. And if this total sum is more than 50,000 euros, we will have to declare all these cryptos, right? Okay, when do we file again the 720? Let's imagine that we did file the 720 previously, and now we are asking ourselves, do I have to file it again? We have to do the same exercise, as I mentioned before, get the balances by the end of the year, or if we're talking about the bank accounts, also the average balance by the last quarter of the year. And if the total sum of these balances has increased in 20,000 euros or more, we will have to declare again the 720 or the 721. It's the same, right? There is also another casuistic here. If we cancel any of the assets we did declare before, and here it doesn't matter if we have increased in these 20,000 euros, we will have to declare again all the assets just because we have canceled one of them. And this is important to know. If we're talking about brokerage accounts, for example, we have a lot of holdings maybe inside, and just because we sell one share in one of the holdings, this will make us have to file again all the assets again. So this is something important that we have to have in mind.
Okay, so now we are going to talk about non-resident in Spain and the special regime that is known as Beccan law. Antonio, the slide?
I mean, this is the first slide. Oh,
No, what is the one?
I'm sorry.
Okay, now, yeah, thank you. Okay, so as I was saying, first we are going to talk about non-resident in Spain. Okay, so you are considered non-resident here if you are living during a year less than 6 months. So if you have a Spanish source of income, you are gonna need to file the Modelo 210, just declaring your Spanish source of income. When you are here less than 6 months and you're working for a Spanish company, you have to file the 210. If you don't have withhold of the 24%. If you already have the withholding, then you have nothing to do with the Spanish tax agency. If you are working as contractor, it depends on if you have a fixed base here in Spain. That means that if you are working in a office, co-working, or if you do, then you have to file as non-resident, but instead of the Modelo 210, you will have to file the Modelo 200, the one that we use here usually for companies. Well, usually, not always. Then pensions, people living abroad Spain, but they were working here, in the past, When they retire, they have to pay also taxes here in Spain as non-resident because the pension is coming from Spain. So that's what is going to happen is that probably you will have a withholding already on your pension. So again, nothing to do with the Spanish tax agency. And the other Spanish source of income usually people have is the rental income. Well, usually you have a lot of people have a house here in Spain. If you are renting the house as non-resident, you have to file the 210, declaring the rental income, and you will be taxed with 24% tax rate. And the other option is that if you have the house at your disposal, you have the house empty, you have to declare also imputed rental income, and declaring it's calculated as the 2% of the cadastral value of the house, and then you will pay again the 24%. The line, it depends on the income you have. So, for example, rental income is the first 15 days of January of the next year. Employment income is it has to be quarterly. So depending on the income, we have to see what the line you have. Next slide, please. Okay. The other option is when you have capital gain because of real estate. So if you sell a house here in Spain and you are not living here, you have to declare also the Modelo 210. The tax rate that you will have is the 19%, and the buyer, but it's not up to you, but the buyer will withhold 3% of the sale price with this form, and you will get back this income, this withholding, once you declare the 210. And the deadline for this kind of 210 is 4 months after the sale. Okay. And now talking about the vacant law, we have one up to until 2023, and from 2023 has been a few changes that you will see. Before it was 10 years that you have to be living abroad Spain to be able to apply to the vacant law. Now it's 5 years. The reason you can apply to the vacant law if you are coming here because you are gonna be working in a Spanish company, or because your company, let's talk about US company, is sending you here because the work you have to perform here in Spain, and also as administrator. Once you apply, you have to apply using the Modelo 149, and then the 6 years that you will have the vacant law, you have to file the Modelo 151. So what is usually happens is that you have the first year that you apply and then 5 more. The other advantage of the vacant law is that you don't have to file a Modelo 720. Once you are received or you are under the vacant law, the tax rate that you have is a flat rate up to 600K of 24% on your earned income. The thing is that before of 2023, you just have to declare Spanish source of income with the vacant law. Okay, but from 2023 on, you have to declare, talking about earned income, worldwide income. But it's working the other way around. If you have a withholding on the earned income, foreign earned income, we will deduct these taxes, this withholding, on your Modelo 151. But you have to declare also the W2 or whatever you have. Dividends, interest, capital gains are taxed, as you can see, from 19 to 26%. So yeah, that's why it's a really good option if you are able to apply to the vacant law. And that's it. Well, now Toño is going to explain you the 1040, the US side.
Okay, as you now we are going to talk about the two U.S. fiscal obligations, which is the 1040 and the FBAR, the Foreign Bank Account Report, which now is named or called FinCEN 1114. But before that, I just want to remind you that you can see from all this presentation, then you have to declare worldwide income in Spain if you are fiscal resident, and if you are not resident, what Flavia suggested is that you have to, if you have any income from Spain, rental income, or you have a house or something, you have to have some obligations. So let's go to the 1040 itself. You as a U.S. citizen, you have to declare as a U.S. person. I mean, you have to declare worldwide income. In the case of the self-employment, if there is more than $400 on benefits, then you have to declare it, and then the gross income for the as a threshold, the gross income for a single is 15,750, and also that's a very important one, is if you file marriage filing separately, the threshold is $5. I mean, this is something that it was changed a few years ago, but it is true that for people married filing separately, everybody has to declare in the States. Okay. As you know, the due date to pay is April 15th. Because according to the U.S. law, you have to pay the taxes in advance. You have to pay them the previous year, and then you have to pay everything before April 15th. And then for it says due date to pay. It says due date to file is April 15th, but you have 2 automatic extension, 2 months automatic extension until June 15th. If you live in Spain on April 15th. That's important, that if you have an extension to June 15th, the automatic one, you can pay later after April 15th, and then you only have to pay the interest of whatever that payment produced, but you don't get a penalty. Okay, but anyway, the idea is to pay everything before April 15th. For those that have been fiscal resident of Spain, and then they have been doing the Spanish, or they were doing the Spanish taxes, they don't have to worry too much, because the normal thing is that with all the taxes paid in Spain, they will cover the taxes that I have to pay in the US with the foreign tax credit that we will see it now. And then the final result will be 0, so they don't have to worry about paying, because there will be always 0, so the deadline is fine. A special consideration for tax payers abroad, things that you need to know a little bit of this, is the treaty between Spain and the USA on non-double taxation, which the idea of the treaty is that if you pay any taxes on one income and a specific income in Spain, then you don't have to pay taxes on that income in the US. But then it is important that you do the tax return correctly, so you declare everything in Spain, all your income, and then you will have covered all those taxes in the US. You can also use the foreign earned income exclusion that I think that we will see it now, and also the foreign tax credit. These two formulas are ways of compensate part of the taxes paid in abroad, compensate them in your 1040. Okay, I add this to be sure that everybody, that you don't forget, is the foreign information report, the FATCA. With the FATCA is just a document which is included in the 1040, which is the 8938, which says the list all your bank accounts, the bank accounts that you own and outside the United States. The threshold of this form is very high, or it's normally high, but is for people married, for people filing single or married filing separately, is $200 at the end of the year, or $300 at any time during the year. I'm talking about foreign accounts, not U.S. accounts. Okay, and then if you file married filing jointly, then it's 400 and 600. Okay, 600 at the any time of the year and 400 at the end of the year. The treaty between Spain and the USA, basically what it does is establish the residency. I'll talk about that at the beginning, for you to know where you are a fiscal resident, which is if you spend more than 183 days, you assume or you are presumed to be tax resident of Spain. Okay, which has nothing to do with immigration residency. Immigration is controlled and run and developed by the police, with the visas and the permits that you have to be in Spain, which has nothing to do with the tax residency or the fiscal residency that we are talking about, which is controlled by the 183 days. So you can be illegal in Spain, but if you are 183 days, then you must pay taxes in Spain. Okay. Then basically the treaty also explains how and where to pay the taxes, in which, I mean, basically from the Article 4 to the Article 24, more or less, which are the list of all the possible incomes that you might have, it tells you where you have to pay the taxes. And to summarize all of them, I would tell you that basically you have to pay the taxes in the country where you live. So in the country where you are resident. Okay, and then it controls, the treaty talks about the earned income, interest, dividend, capital gains, royalties, rents, pensions, annuities, all types of incomes. Okay, the foreign earned income exclusion. The idea is that if you live abroad, you can exclude foreign earned income up to 130,000, and then this next year will be a little bit more, and then it will be growing every year because it's adjusted for inflation annually. And the important thing is that you must earn the income to qualify wages and self-employment income, and does not include passive income. So you cannot include in this 130,000 interest, dividends, and capital gains that you might have, or pensions or rental income. That is not included in this 130,000. And must be foreign income. So that means that if you have to be in Spain, work in Spain, and work from Spain to qualify for this foreign income. It is important to remind you that the salaries from the U.S. employer, even if they are paid in a U.S. bank, can be excluded because the consideration is the residency is in a foreign country, and then by the U.S. law, it is considered that salary is a foreign salary. Okay. More. Well, for those restrictions, basically because of does not include the interest, capital gains, etc. For the residents in Spain, we prefer to use the foreign tax credit. The foreign tax credit basically is that the idea is that you credit all the taxes paid in one country with the taxes that you're supposed to be paid in the US. And that you can use in here also taxes paid on interest, dividends, capital gains. So, any kind of income. Of course, you cannot exclude with the foreign tax credit the amounts that you have already excluded on the foreign earned income exclusion. And the most important thing is that in Spain, or in general in Europe, we paid much more higher taxes than you paid in the US. And in Spain, it's almost around double, a little bit less than double. And then the difference that you don't use, taxes paid in Spain that you don't use in your US tax return, then you can carry forward them during 10 years, which means that in the following 10 years you can use those taxes. The logical thing would be that you will never have to use that, because you always be paying, as long as you live in Spain, you will be paying more taxes. But there are two typical cases that we have faced in which, if you have been using the foreign tax credit, the foreign earned income exclusion, you don't have this carry forward, which are when you are fired from a company, the indemnization. How do you call that? Well, that pays does not pay taxes in Spain, but it pays taxes in the US, and then that is a problem. The other issue, or the other possibility, is for people that they live in Spain and then they move to another country for a while, in which the taxes are lower, like, I mean, mainly Singapore, Hong Kong, or even the Arab countries where they don't pay taxes. Then you can use those taxes paid in Spain or paid abroad just to compensate the taxes of the following years in the US. The foreign tax credit applies to self-employment tax through the totalization agreement. I'm sorry, say Portugal, it means Spain. Okay. Let's see. Okay, this is the FATCA, the 8938, which is the what I told you before, which is just a report. It's a report that we have to include in the 1040, in which we have to include it since 2010. And then it's to report financial accounts, foreign stock and securities, orders of interest on a foreign entity, financial instruments and contracting with. So every financial account that you might have, you have to report it in 8938. And as I said before, the single and married filing separately is 200,000 at the end of the year, or 300,000 at any time during the year. And in the married filing jointly, then it's 400,000 at the end of the year, 300,000 at any time during the year. Okay. Let's go. Then on the 1040, this year we have some new situations or new things that are new for this year. Of course, the due date to the return is June 15th. I just put that because some years it is not on the 15th, it's the 17th, depending on if it falls on a Sunday or on a holiday. This year it doesn't. I mean, I think it falls on a Wednesday or a Thursday, so it is June 15th. The standard deductions for this year have increased, and the single and married filing separately are 15,750. Married filing jointly is 31,000, and the head of the household are 23,600. It is true the child tax credit has increased to 2,200. This is a credit that you have for every child that you have younger than 17. But I mean, this is the credit, the total credit is 2,200, but it is only refundable 1,700, which is what really affects all the families that they have children younger than 17. Basically, they will be getting back this 1,700. And well, this is the One Big Beautiful Bill Act, which is the new law that Trump established, has a deduction or a credit for older than 65 of 6,000 euros. But I mean, as I said, this is a credit, so it's not a refundable credit. And then, since your tax returns they are declared in Spain and you have paid the taxes in Spain, I mean, that doesn't affect you at all because your tax return will be always zero. Okay, so it is important just to say that. Now the FBAR, which we are just getting to the very end. The FBAR is the foreign bank account report, which was originally it was originally this number there, but I mean now it's the FinCEN 1114. Now it's reported to the FinCEN, not to the FBAR. It's a different document with a different structure. Originally it was before it was the TDF 1921-22-1, and this was, as you have here, it is in place since 1970. It was a law signed by Nixon, and basically you have to declare your bank accounts, not only your bank accounts or your financial accounts, but also the ones that you have share with somebody else, and also those that you have signature authority. So there are more other accounts than that you do in the FATCA declaration. And if those, the addition of all those accounts, the maximum balance of all those accounts, they are over $10,000. I'm talking about foreign accounts, okay? They are more than 10,000. Then you have to, anytime during the year, then you have to declare the FBAR. You must report, as I said, joint owners, joint account. Even if the owner is a foreign person, you must report the singular authority over the financial interest of foreign financial accounts. And the reporting threshold is 10,000 for aggregate amount of the highest values of all the foreign financial accounts. Okay, so it is true that they are a little bit, the FinCEN is some kind of related or included, part of it is included in the 1040. In the 1040, the Schedule B, at the part 3 at the very bottom, you have to declare if you are doing the FBAR, and then what are the countries in which you have foreign bank accounts. And then you have to report that in the 1040. So the IRS will also know if you have done the FBAR or not. Well, here the penalties include 10,000 per year not filed, 50% of the balance of that reported accounts. Well, don't worry, criminal charges and so on. And then we go to the important part, which is the questions and answers. Then you can type your questions in the PNR, and then we have already some questions that I'm going to read them, and I'll ask our colleagues to answer them if they are not related to that. The first one is, do you have to declare a home purchase in Spain on your US tax return? No. Not only the year that you purchased, but every year. No, you don't. In the 1040, you only report income, so you don't have to declare your real estate. Next question. Do you have to ask the IRS for extension to June 15th? No. You have to attach a document we do for all our clients in which it says that you were not living in Spain on April 15th, and that's why, according to the US law, you can you have the extension to June 15th. But you only have to attach this document. Okay. Question 3. You mentioned the foreign IRAs are required to be declared in the 720. I understood that if they were not declared, as long as those funds were not distributed as income, also amounts in the Spanish plans and pensions and foreign IRAs from part of the calculation of the wealth tax threshold. Could you answer that? Well, the first part is on Jose Miguel, if he's around. Yes.
Hello? Yeah.
Yeah. Can you answer that? The IRS are required to declare in the 720.
This is a very good question. Yeah, many times we get to confusion about this. You mentioned foreign IRAs are required to be declared on the 720. I understand they were not declared as long as those funds were not distributed. I mean, the 720, we have to understand that we do not declare any kind of income or any kind of distribution or any kind of capital gains interest. We only declare the value of the accounts. If we talk about distributions, income, then we have to go to the Modelo 100 in Spain, the Spanish tax return, because we do declare the income we receive from these kind of accounts. But in the 720, we only declare the value of the account by the end of the year. And it doesn't matter if you have had any distribution or not.
Olga, do Spanish plans, pension plans, and IRS are part of the calculation of the wealth tax?
I think that we have to understand the difference between Spanish plan, pension plan, and IRA or Roth IRA. So the big difference is that you can't take the money from the pension plan because before pension age, and in contrary, you can take the money from IRA or Roth IRA whenever you need it. You will get a fine or you will have to pay a commission, but there is a right to take the money away. So for Hacienda, it means that Hacienda, in this case, doesn't treat IRA or Roth IRA as a pension plan, and it treats them as a financial product. So it means that IRA, Roth IRA should be included in the wealth tax. And there is several blinding ruling with the Spanish tax agency, which confirms it. So if you want, you can send us email, and I will send you the link to this document.
Okay, that is another from the wealth tax. To help understand the wealth tax, that would be calculated between the value of your bank accounts and the value of your home, assuming you only have one residency and no other assets. Yes?
Yeah. So we have to understand in this case if your home is your private residence or not. I mean, it could be your property, but it's not your primary residency. So in the case if it's your primary residency, you have an exemption of 300K in your wealth tax. So in this case, you wouldn't pay taxes on this amount. And you will pay just only on the rest value of your primary residency and on the amount of the money which you have on your bank account on 31st of December. And to calculate the amount which you need to pay, you just need to, I mean, the tax rates, they varies from one comunidad autónoma to another one. So it's, I know I can't give you the numbers right now. So, but if you want, you can send me email and we talk about the numbers.
Okay, there is one more. Let's keep coming. I work as a freelance for an American company as an English teacher. It means I need to register in Spain as an autonomous, which means sole proprietorship and pay taxes to the Spanish government. That's for you, Olga.
Yeah. Yes, if you live in Spain and physically work from Spain, providing your service as a freelance to a foreign company, so the Spanish law says that you have to pay social security fees, and there is only two ways to pay social security fees: or being an employee or being a self-employed. So it means that you have to pay social security fees, you have to register as autónomo, and pay corporate taxes in Spain.
Okay, another for you, Olga. Do you have to include IRAs and 401ks in the wealth tax?
Yes, you do. I've already answered.
Okay. Next one. As to not pay tax twice, how does it work in practice? Well, basically, if you are fiscal resident of Spain, then you paid in Spain the taxes once, the first one, and then you offset the taxes with the foreign tax credit in your US tax return. So you only pay the taxes here in Spain. Frank asks us, it depends on whether it is a traditional IRA or a Roth IRA. In a Roth IRA, so in my understanding, will not need to report gains. Not exactly. In Spain, the Roth IRA, it doesn't pay taxes on the capital of the Roth IRA, but it pays taxes on the gains that you have had during the year of the history of the Roth IRA. So this is what you have to report. It pays taxes, but only the Roth IRA only pays taxes on the gains that you have had. Another question. Both traditional IRA and Roth IRA are assets, so it makes sense that they both are added to the assets for the Spanish wealth tax. Well, thank you for the comments, Frank. And I don't think I have any more questions.
No, there is questions in the chat.
Yeah, in the chat you have more questions, Tonio.
Okay, then I'll do it in chat. Do you offer, well, this is a final question. Do you offer a tax simulation services? I'll answer that. Okay, we can do that, but I can almost, just with the experience that we have, we can almost estimate the taxes more or less how much. I mean, it doesn't matter if it's the wealth tax or is the income tax. We can estimate it more or less how much is going to be. In fact, you can do it by yourself. If you have the US tax return from the previous year, you can double the amount of taxes that you pay and reduce it a little bit, because it's more or less, it's less, no, it's more or less. It's a little bit less than double the taxes that you pay in Spain than the ones that you paid in the US. Okay, let me go to the chat and see what we have here. I became a tax resident in Spain in 2026, so will file my first taxes in 2027. I still have US bank accounts that will close before the end of the year. Will I need to report them in the 720? No, in the 720.
No.
Oh, I'm sorry, Miguel. José Miguel.
No.
Your question,
Please.
your answer.
Well, I know you know the answer also. No, obviously these accounts have never declared before, and these accounts are going to be closed before the end of the year, of the fiscal year. You will not have to declare them.
We are tax residents in Spain, but we all our income is in the US. We have paid some capital gains in tax in the US, for which we can claim a tax credit in Spain. No way. And we have to pay some taxes in Spain on the US income, interest dividends, for which we can get tax credits in the US. How does the US tax return do the filing process? We only have to file once in the US and once in Spain. Yes, okay. Yeah, but I mean, according to the treaty, you have to pay the taxes on the capital gains, you have to pay the taxes in Spain. So whatever they have, if you have a withholding in the US, you will get that a credit, you will get that as a refund in your US tax return. So you will not pay taxes in the States, okay? Even if you have already paid them, you will get them back, okay? Because the treaty says clearly that you have to pay the taxes on capital gains, you have to pay the taxes in Spain, okay? And then, of course, it's no need to do two taxes. We do the first, we do the Spanish taxes first. We ask for an extension. You know that the Spanish taxes, as Olga said before, there was from this year, from April 8th to June 30th. And then with the Spanish taxes, we can prepare the 1040 with the foreign tax credit corresponding and all the taxes that you have already paid in Spain. So we pay taxes in Spain on severance in the US. Yeah, in Spain, you don't pay taxes on the severance. Is excluded. Or at least depending on the limit, one part is excluded. But you have to pay on severance. You have to pay taxes in the US. That's why it's important, as I said, it's important to do the foreign tax credit rather than the exclusion, and that's why I am a strong believer that it is a mistake to do the exclusion. But anyway, it's up to you. In case is anyone not aware, the US only gives you credit on the percentage of the taxes paid in Spain. So unless you move to a country with a lower tax threshold, at some point you will never be taxed as you use your full tax credit. This is, I think, that I explained to you. I thank you for the explanation. But as I said, I mean, in Europe, all the countries in Europe, we all pay more taxes than you have to pay in the US. And then the taxes that you have not used, you can carry them over the 10 following years to use them for, I mean, any taxes that you owed in that. The OBBBA credit depends on the MAGI. It goes away depending on the MAGI. I think so. I am, but I don't remember exactly the figures. But
I think it's 150 case.
150 case?
Yeah.
On the MAGI. Okay.
On the MAGI.
In the FBAR, we report the mutual funds. Pension funds, can we invest in Spanish mutual funds based on the passive? Well, the PFIX. Okay. Of course, you can buy mutual funds in Spain, fondos de inversión. I mean, if you want. But the IRS doesn't like that. And then they force you to file an 8621 for every mutual fund that you have, and then they penalize that. They calculate the gains of the mutual fund or the fondo de inversión, the part that is not even, they have not given it to you, okay? And they calculate that part, and they tax you that as the highest rate, which is 37%. Then also they calculate the taxes the income that you received. I mean, if it's more than, you receive an income, even you didn't receive an income, the increase on the gains that you have had over the last 3 years, and then they put you another tax. And then there is also a third tax if the previous year is more than 135% of the 3 years or something like that, and then they have another tax. At the end of the situation is that you are penalized for having a mutual fund. I think the amount that the IRS accepts that you can buy is up to $25,000. And I think if you have mutual funds, what you should do now when we finish this, well, not because the banks are closed, but I mean, tomorrow morning, first thing is go to the bank and sell them all, because it is a mistake. You will be penalizing for that on the 8621, and then you will see that you deduct the taxes that you are paying in your tax return. You will see that they really take up to your capitals. What documents do I need to file taxes? Well, we had a list of documents. If you go to the website, and then in every taxes, in the 1040 at the very end of the page, it tells you a list of documents that we need to prepare your taxes, and then click there, and then you have the complete list. But once that you are registered with us, we will send you an email every 10 days with a list of documents that we have not received yet from you, and this is an automatic email, and then you will get it every 10 days, as I said, until you give us all the documents. Vivo en España y solo tengo un salario aquí, no en USA. Soy ciudadana americana y tengo que rellenar impuestos en USA. Supongo que el formulario 1040, no sé si tengo que rellenar el FinCEN, porque no tengo propiedades en ningún sitio, solo dinero en una cuenta en España. No entiendo bien el modelo 720, debo declarar en la medida anual lo que queda. Okay, well, if you don't have any assets outside Spain, then you don't have to do the 720. The 720 is to report the assets abroad, abroad of Spain. And then if you are a US citizen, you have to do every year the 1040 and also the FinCEN. Okay, if you are you are over the threshold. And the threshold that we said for the FinCEN is $10,000 on the aggregate amount of all your maximum balances of all your bank accounts or your financial accounts. And the 1040, well, depends if you are filing single, you are filing separately. If you're filing separately, as I said, with $5 of income, and also, well, it could be also head of the household. Okay,
Toño, un segundo.
Yes, please.
A María, por lo que da a entender tu pregunta, a lo mejor me equivoco, intuyo más de la cuenta, pero no sé si es que nunca has declarado por cómo hablas del 1040. Si quieres, llama a la oficina y te pones con cualquiera de nosotros y hablamos, ¿vale? Porque si fuera el caso, es un streamline. Y he leído otra pregunta por ahí también, que si podían aplicar. Si, obviamente está abierto el plazo y podéis, si no habéis declarado nunca como debéis por nacionalidad, se puede hacer el streamline y no hay problema, ¿vale? Que da esa sensación, ¿vale? Ya, Toño, gracias.
Gracias, Fabián. Another question. Do we need to report mortgage accounts in the FBAR? Yes, I think so. Why not? All your financial accounts. For the 720, that's a question for you, José Miguel. If you have decreases of 20K, do you have to declare it in subsequent years?
Obviously no, because you have an increase in 20,000 euros, but I want to say something here. You must know that we don't see the accounts individually, all right? Maybe I have an account that I have decreased in 20,000 euros, but what we have to see is the sum of the total balances of all the accounts. That's what we have to look for, all right? Because I have these questions many times in the office. You don't have to see individually each account. You have to sum the balances of all the accounts you have outside of Spain, and then see if the increasement is being 20,000 euros or more. But obviously, if there is been decrease in this sum of the total balances, you don't have to declare the 720, and you will not have to declare it until the sum of the total balances are increasing in 20,000 euros or more.
Okay, thank you, José Miguel. Here is your question, Flavia. I'll answer, but this is your question. I'm Spanish, but I have lived in the USA, and I have double nationality. I didn't know that I have to file taxes in the US. We'll have a penalty. Okay, for people that have not filed taxes before, there is a procedure that the IRS offers for foreign people. People that live in abroad, which I assume that is your case, which basically we call it the amnesty. The IRS doesn't call it the amnesty, but they said that if you follow that procedure, they will not audit any of your years before. One of the conditions is that you live abroad. The other condition is that you don't have to owe anything to the IRS. And as we said, if you have done the Spanish taxes, the logical thing would be that you don't owe anything to the IRS. And also, there is no non-willful. So you didn't know. The reason why you didn't file is because you didn't know. And then under these three conditions, they accepted. The procedure is a little bit longer, and we are a little bit short of time. So I prefer, if you don't mind, just call the office or send us an email, and then we will tell you about the streamlined procedure, which is what we have. You have to file US or Spanish taxes first, Spanish residents. Then you have to file Spanish taxes first, because if you don't file the Spanish taxes first, you will never know how much. How much taxes do you pay in Spain in order to compensate with the US taxes? So you need to do the Spanish taxes first. Okay. Could you explain again about having 10,000 euros in a bank account in Spain? I don't think I can explain that because I don't know what you're talking about.
The FBAR, Tonio.
Okay, but then the FBAR is $10,000. Okay, the
Yeah.
FBAR is a U.S. obligation, so it's in dollars. And then it says that you have to report it if the aggregate amount of all the maximum balances of all your bank accounts is over 10,000, then you have to do it. So just to give you an example, if you have in one bank account 5,000 in the Banco Santander, and then you get tired of the Banco Santander and you move this 5,000 to the Banco Bilbao Vizcaya, and you are tired of the Banco Bilbao Vizcaya, and you move this same in the same year, this same 5,000 to Bank Inter, then the maximum balance of all the addition of the aggregate amount of all the maximum balance is 15,000, and then you have to report the FBAR. They are not looking to know how much money you have. They want to know the maximum balances that you have had. Okay, I hope that is good enough. If I pay taxes in Spain that are higher than in the US, then I understand I don't need to pay or field report in Spain. No. Yes, I mean, the taxes in Spain for the same income are going to be higher. As I said before, it's almost double as what you paid in the States. But you must file the US tax return, the 1040, explaining or saying that you have already paid the taxes in Spain. Okay, and reporting in that tax return, in that 1040, reporting, declaring worldwide income. Okay, the same as in Spain. Okay, ¿qué tipo de inversiones podemos tener en España sin penalización? Cuentas remuneradas, letras del tesoro de distintos países, acciones. Yes, all those things that you said, you can have them. What you cannot have are what the IRS calls PFICs. And then if you don't know what a PFIC is, and you don't understand it from the explanations that you can get in Google, then call the office, tell us what is your investment, and then we'll tell you if it's a PFIC or not. The PFICs are the ones that have to do the 8621, and which is the one that the IRS penalized. To clarify, withdrawals from the Roth IRA at the retirement will be taxed as income in Spain. No, only there will be taxed only the part of the Roth IRA which represents not the capital but the gains, only the gains that you have had. Okay. Is it still possible to adhere to the amnesty fiscal if we have not filed any form on the IRS having both nationalities and residence? Yes, I mean, as long as you live in Spain, as I said before, you didn't know that you have to file taxes in the US, and you don't know anything, that I can tell you that if you have filed Spanish taxes, you will not owe anything. Then under these three conditions, yes, you can apply for the amnistia, but technically the IRS calls it the streamlined procedure. It's foreign offshore streamlined procedure, is what it's called. The FBAR, hay que presentarlo si se superan los 10,000 casos en cualquier momento durante el año en una cuenta, ¿correcto? Yes, with all the bank accounts. Si alquilas o vendes una propiedad en España, hay que declararlo en el US. Well, if you rent it or sell it, yes. I mean, you have to declare in the US because that is part of the worldwide income. I mean, it doesn't matter that it's in Spain. Okay, then another thing is how to apply the foreign tax credit. Do we need to pay US state taxes even when we do not need to pay US federal taxes? I heard that Virginia requires to pay income tax even if you don't pay those taxes in Spain. Okay. Every state has a different rules. Yes, if the state requires you to pay taxes, then you have to pay taxes. But if you don't have anything on that state, and you in one point you decided that you are not going to go back to that state because you don't have anything, and then you are not resident of that state, then you do not have to file the state taxes. Of course, you can change your mind, and then in 5 years or next year or next week or tomorrow, you can say, well, yes, I want to go back. And then that's another issue. But technically, if you are not living in that state and you don't have anything in that state which the state can consider that you will be coming back, then not even in California or New York, okay? Which I mentioned these two because these are the two most complicated state taxes, or more restricted, I would say. If I'm an administrator of an account and a business that has over things, do I have to do FBAR? Yes, you have to do the FBAR, declaring not only that account that you are the administrator, but also your bank accounts and the ones that you share with your spouse, if any. I sold my house in the US in 2021. How it is taxed in Spain? It's taxed on capital gains. So I hope that in 2025 you were fiscal resident of Spain, you will have to pay a lot of taxes because you will be paying the difference taxes on the difference between the selling price and the purchase price. I have two government pensions.
Excuse me. Let
Yes,
me just
please.
add, please, just to inform that if you did declare this property in the 720 before and you sell it, you will have to declare again as a cancellation asset in the next 720, just to add this information. Thank you.
Okay. I have two government pensions from the USA, 74,000, and US Social Security 30,000. Would my taxes still be double? No. What do you mean double? Double? No, nowhere double. It will not be in any case. You will have to declare, I mean, in both countries, and then you will be paying taxes. In Spain, for the 30,000 on of the social security, because it's taxable in Spain. It is not taxable the government pensions, so you don't have to declare that in Spain. And then I think Olga explained it before. That depends on if you have if you are Spanish or not. Then it will be a different consideration. But then you declare in Spain the Social Security, and the taxes paid on Social Security, you deduct them on the US in the US side. So no double taxation. Do we have to submit and pay taxes in Spain and later in the US? For which reason? Because you need to deduct the taxes paid in Spain out of your US tax return. So only because of that is a good reason to do it. Basically, and also because the treaty says so. The treaty says that you have to pay the taxes in Spain. And then if you want to offset those taxes in the US tax return, you need to do it later. I mean, so you know the amount. If we cannot invest in mutual funds, can we invest in Spanish stock without penalties? Okay, but Spanish stocks, I mean, that's what you can do in Spain, but never fondos de inversión. Okay, so you can buy stocks from a company, which they are not considered PFICs by the IRS, but I mean, there has to be stocks for, I don't know, Renfe, Adif, or any of the, I mean, any company. Si declaré el 1040 mientras estuve en USA, pero ahora no tengo que hacer desde aquí. I mean, if you are a US citizen, you must continue doing the 1040 all your life. Okay? So you have to do the 1040. Then, depending on the number of years, I will recommend you to go to the amnesty in order to be sure that the IRS is not going to ask you for any of those years. Are we getting a copy of this meeting or slides? Yeah, thanks. Yes, we will send it to you over the weekend. As a tax resident in Spain collecting Social Security from the US, do we have to pay taxes on that income? Yes, we say that. Social Security from the US pay taxes in Spain 100% as a earned income. I look online and it looks like you now offer e-filing. Is that new this year? So we no longer have to email. Yes, that is correct. We offer e-filing, and then you can go to your client's area and then click there. We put a big red sign saying that I want to do e-filing, and then when you click, it becomes green, which says that you are registered, and then we will remember that you have we have to send you the authorization to do the e-filing. Thank you. Want to thank you all of this, and this has been informative. I also want to send a big thanks to this session. Unfortunately, I have to leave. Thank you very much for this webinar. It has been very informative. Massachusetts, tengo que pagar taxes si no vivo allí. No tengo casa. No, Massachusetts, you don't need to do state taxes. How it is possible to work and pay tax in Spain, but get the tax refund in the US? My experience last year. How is it possible? Well, I mean, if you claim that in your US tax return, I mean, you will get a refund. I mean, I don't understand very well the question.
Probably Macho is not a Spanish tax resident, he's a Beckham. That is why
But
there is a
even
question.
with the Beckham, I mean, you cover the taxes in the US. But anyway, Michael, my suggestion is that you call the office, and then we will check, depending on what you're talking about, we will see. Okay, if you work in both countries at the retirement age, can you get Social Security for both countries? Yes. Yes, of course, you can get Social Security for both countries. I was going to add, if the Spanish Social Security lets you do it, but anyway, yes, they should do it. When do we start submitting forms to you for Spanish incomes? I mean, when do we start submitting forms to you for the Spanish income tax return and the US income? Okay, the forms that you have to submit are the same. We need to know all your worldwide income, and then as soon as you upload them to the client's area, the better. Because we have time to prepare the Spanish taxes, and we have to prepare the taxes not only with the Spanish income, but also with the US income. So start now. I mean, tonight. No, don't wait more. Gracias por todo. We will do a similar presentation just for the streamline. Will you do a similar presentation of the streamline procedure for people who have been many years but didn't know how to do it? Okay, but not this year. For sure, we will do a streamlined process and a streamlined presentation next year. But then my suggestion would be that if you are interested, give us a call and we will solve that. In fact, well, okay, now I see who you are. Then, in fact, we're planning to do this same thing next year, but instead of doing all together, we will do it by slots. So we'll do a seminar on the 1040, I mean, a webinar on the FBAR, a webinar on the Modelo 100. So we will do a combination, because I understand that probably people were interested in only one thing, and then they have to wait the whole time. From my question earlier about the pension and Social Security, my Spanish taxes would not be double in the USA. From my question earlier about pension and Social Security, my Spanish taxes would not be double. No, will never be double, because whatever you pay in one country, you pay the taxes in that country, you can offset in the US. But when I'm saying that country, it means Spain, because it's where you have to pay the taxes. Then if you are fiscal resident of Spain, you have to pay the taxes here, and then you offset all those taxes in the other country. Muchas gracias. Fantastic webinar. Thanks a lot. Muchas gracias. Muchas gracias. Thank you. Has been a pleasure. Gracias. Muchas gracias. Okay, I think this is all. I don't know if we have more on the PR. I don't see. No. Okay. Do we have to include any area of communication? Yeah. All these, we have answered all of them. Okay. Well then,
the last question.
Excuse me?
You pay taxes on a public pension, Tonya. No, you don't.
Yes.
Okay, well then,
I mean, depends.
I just want
Well,
to
it
say
depends
thank
if
you
you
to
have the
all of you.
nationality or
and-
not. Yeah. But if you
Okay.
have questions, you can call to the office. All of you.
Yeah. There is no problem. I mean, call the office from 9 to 2, and almost anybody can answer the questions. And if not, they will pass it on to the expert on the different tax returns. And then thank you very much for your attention. Thank you very much for being here with us almost 2 hours. It has been a pleasure, and I hope that we can help you on any issue that you need. Please give us a call or book a free appointment through our website, that we will be more than happy to answer and to help you with your situation. You want to say something?
No, just to say thank you for the assistance. It was a pleasure to help and to answer your questions and to resolve your doubts.
Okay. Well, thank you very much. Thank you.
Thank you.